Welcome today. Welcome to the Foundation for the Study of Cycles. My name is Lars von Thienen. And today we will talk about cycles. As every time on Monday, this time during the week, this is our slot to have a chat on cycles. Yes, so thanks for joining me today. I need to watch the discussion and the stream quality, so feel free to always drop me a note in the live chat. So today we will again spend some time on some question and answers to discuss some live feedback you might have in regards to how to use the cycles. So what's on the agenda for today? First of all, we will introduce a kind of way to better discuss cycle studies. You know, dealing with cycles, and the purpose of this meeting is more to talk about your knowledge on how to use cycle analysis. So this weekly session is dealing with current actual market data. So we will use live data and live data sets and apply cycle analysis. And one topic to get better for cycle analysis is to discuss and learn topics. So we have improved our tooling, and I will show you in a second how we will continue sharing cycles and also bringing the discussion here into this session, to make it more easy to discuss cycle analysis here in this live session. So therefore, let's jump over to our cycle analyzer, which we'll use here at the foundation for our discussion, and then we can start talking about some interesting topics here. So for today, let's start with some basic cycle analysis. So let's review some main markets here and just see how the status of important cycles is. I think what we're all interested in is always the main markets. So let's switch to the index here and let's check again the main indices and get back to the daily analysis here. For example, if we just have a look to the S&P 500, which is interesting, by the way, anyhow, so that it looks like, beginning of February, the market's turn. So it's always now an interesting question. Is this an important turn? What do the cycles tell us about this turn? So therefore, let's dive into this data set. And as always, so I will always repeat the standard procedure so that you are able to follow how the standard way of doing this is, so that you use the spectrum chart here at the bottom with the current cycle analysis here. You look for the peaks in the spectrum chart. So you watch for where are the peaks with the highest amplitude. So this means these are important cycles which are in the data set we are currently analyzing, which is here the length of 160 something. And we always look for high strength and high Bartle score. I always try to explain these topics here. So a green triangle means we have a good Bartle score. The red ones have low Bartle score. I would be careful with using these ones here. The blue one, the Bartle score is okay. And if we have a high strength through the size of the triangle here. So let's start with the largest cycle here with a length of 163. You know that we observe this cycle during a very long period. Interesting here, if you follow this continuously, you know that this cycle seems to shift forward and backwards. So this is a common observation, what's always happening with cycles. So they are never static. And that's also the challenge for us, being in sync with the cycle phase and not only the cycle length. So the cycle phase tells us where the next high or next low, or at least from the past, is aligned for that cycle. And this might not stay fixed here. So, but at least, so this cycle seems to be at the cycle turn. We know that this cycle top has also been shown more early if we get to the past. But reading this current reading here just from a longer cycle looks like that we are at a timing point where the turn could happen. The next lower one here is the one with the length of 126. So you can add it to the mix, and then you see it will shift a little bit so that we are right in the turn here right now. So that's at least just using 2 cycles for the main projection here. You can then zoom in or get even more into the past, but that's the current projection. Once you analyze one market or one data series, you need to be aware of that you should cross-validate different data sets. Yeah, I always repeat this procedure because it's important. So one topic we can use for the main markets are sentiment data sets, and one possible data set we could use for sentiment data is the so-called volatility index. So I always recommend, at least if you look at the S&P, the volatility index is a good idea to check if cycles with similar lengths and similar phase could also be detected in this data set. So this is the volatility index up to today. Let's check the cycles here. And the main dominant cycle, which stands out here, has a length of 175. So let's add this to the chart. Whoops, sorry. Let's add this to the chart here. And as can be seen, this cycle, well, from the alignment in the past. This is again the cycle of 170 something, which was very strong and stable during the last year, but it won't help us today. So as it shifted in the main markets, we still see the cycle in the volatility index. It's pointing to a low somewhere in March. So, and a low in March corresponds with a high in the main index here. So the cycle should be read vice versa with the volatility or the fear index here, using for this example. So these cycles should come into alignment, but from the phasing perspective, you see we are approaching the bottoming area here. Yeah. So if you make the picture a little bit larger, you can see here that from the timing perspective and the cycle, we are in the bottoming phase of the volatility index, which could be equal to the topping phase in the main markets. So to keep it in sync here, you could say that the main market cycle with a length of 130 something is in alignment with the volatility index cycle here, in this case, from a daily perspective. So let's see what are the slower cycles or shorter cycles here. The length of 40 is shown as a high strength, high Bartle score here in this case. I mean, it might not from a long-term perspective, yeah, it shifts a little bit the expected bottoming a little bit to come in more early. So first half of March. So that's where we are now. So this would even bring, if you switch it, you see here it's it's 14th March. No, it's the same. So, sorry, it's the 14th March, and the longer term one is the 20 March. So the combination of the shorter term cycle would bring the next expected bottoming here, at least I think next week. So that's the volatility index. So let's switch back here. So the main markets, and that's always how you do it. I use this also as a showcase here. So the main markets is expecting to top also beginning of next week, volatility index bottoming next week. So this would be in alignment. And now you should always go to a next higher time frame, which is in this case would be the weekly data set. I will not do this here, but we did analyze weekly sentiment measures during the last sessions. If you remember, we have seen the financial stress index for the main markets, and I've shown you the National Association of Investment Managers index, the NIM index, and there's also an interesting cycle. Both data sets are weekly data sets, and they showed us some weeks ago that a market turn would be imminent. And I remember that some out of the community here remembered once we shared the weekly cycles that they have not been in alignment with the daily cycles. For example, the sentiment daily cycles on the volatility index. So the weekly cycles showed us 2 weeks ago that a major turn would be to be expected in the markets, while the daily cycles have not been in alignment. What seems to be the case starting next week. Yeah, so next week, the weekly and the short-term daily cycles come into alignment. Okay, that's the situation on the main markets just here. So let's now use this example also to showcase the new way how to discuss these data sets together with you, because I know often you have questions on your own analysis, and it's then always hard to just put it in just 2 sentences or even write emails, and there might not be the time to answer all emails. So the new way how to do is, so maybe let's get back to the S&P 500. Let's use the same analysis here we did. Let's activate this cycle here, the longer term cycle. We can also add the shorter cycle, but in general, these 2 cycles here with this composite here. So you know that you can save these workbooks. So, and by save, this means you save it to retrieve this composite later. So you want to follow how the composite plays out, you save your workbook. Yeah, this is already there. You might know about this, so you can reload it later from where you have saved the data set. What's new, and it's not completely new, but we have changed it now, is the function to publish also a data set. So there's the button here, which will allow you to publish this workbook. And publishing a workbook means you get a public link which you can share with colleagues, with guests, or within this cycle community. So, and the way how to publish a workbook has changed now, and we have improved this feature for a special reason. So if you decide to publish a workbook, so it's not only you, if you save a workbook, it's just for you. If you publish a workbook, you make your analysis available to others. Yeah, you can give it a title. So I can tell it here, Cycles TV S&P 500 cycle study. You can add then a short description. This is just added here. In sync with weekly cycles questions. So it's your personal description or comment here. So you can give it a nickname. The nickname is important here because this is what will be visible to others. We will not share your email or username. You decide what name will be visible to others here. So you can give it your nickname here. Then you can automatically say how long will the public share be available. So you can just give it a date here from the calendar. And then you can decide to share it in a public way or private way. If you disable public sharing, this means that only people with a link can open it. Yeah, it's similar to private YouTube videos or other shares. So you get a shareable link, and the people who have the link are able to see it, but no one else. So you decide with whom you share the link, they can open it. If you make it public, so this idea will be shared within our Cycles community, so all members of the foundation can see this idea as a public idea and comment and discuss on that. Or you decide then if you allow others to comment on this. So you can also disable comments. So if you don't want others to comment on your topic, or if you want to discuss your idea or maybe have questions, you can directly in your analysis allow comments here. If you just want to make it private, just disable public and comments, then it's just a link you can share within your private group of colleagues here. So you decide what you will do then, and then it's published, and you know this now. So this link is available for you. You can copy it, and with this short link, and I will also copy it to the session for now, this workbook is now available, yeah, for everyone. And or at least for everyone who has the link. In just a second, I will just share it here also in our session. So here you have it, and this link you can now use to exactly open the study I have used. Yeah, so this link I've now put into the live chat. You are now able to pull up exactly the analysis I have here on the screen. Yeah. So now we can start to collaborate. So you can now open the same chart here I have currently open in this live session here. Now you can tweak it or even test it to your own needs, and then you can come back with questions. We can do this here live now. So you are able to really work with it, or even after the session, we can start continuous discussion on this workbook now. So this is really important to bring this cycle discussion forward. And if you want to get back to your ideas, there's now a new menu entry. If you go to settings here, let's make it larger here. you will see that there's a new section, My Ideas, right? So, and in this My Ideas section, you will find your published ideas. And here on the left-hand side, you see the one I have just shared now, the Cycles TV S&P 500 cycle study with my comment. You can update your shared idea. So you can just update your description, or even you can make it private, or you can disable comments. So you're always able to update your idea. You can directly open it. You can copy the link to post it to others. And for sure, you can quickly remove an idea. So if you don't feel comfortable with sharing ideas, you just press the trash icon and the shared study will go away. So then you have not only saved workbooks, which is the workbook area, you have also published ideas. And the reason for that is there are two reasons why we brought this now into this section here. Because I want to use this Monday session to discuss your ideas. So it's not only me sharing in this kind of one-way communication ideas with you. I want also that you just bring in your workbooks, your ideas, and then you can also raise your questions. What do you think about this cycle? So I can pull up your idea here in this live section, and then let's discuss this idea here in this public community. So this will cycle analysis become a real community value. I think we will push it into the digital area so that we can do this live, but not only here on Monday, you can also do this on your own and to push it forward. So this is a new feature which will help us. You see here I have the National Association of Active Investment Managers index here. So I've published also the study. I can copy the link here. Also push it back to you so that you can also we see this idea here. Yeah, so that's it about bringing now this into our live community here and become interactive. I want to have this weekly session an interactive live session on cycle analysis. So do me a favor, until next week Monday, prepare your ideas. Do your own cycle studies, use what data set you like, what market you like, activate the cycles you think they are useful, publish this as an idea in your own application, and then share this idea here on Monday in the section live, and then we can start discussing these markets, data set, whatever you like. Okay, so that's maybe just having a look at the main markets, just introducing the new publishing ideas. Let's now move over to the question and answer session. So please rush now in with your questions. So I will now review your questions and go through it. So create, let's do it this way. So I also try to make it more transparent which topics we discuss. So this question here about, would you please show us again how to create your own data set for individual stocks and communities? Yes, for sure. So if you want to analyze, there are two ways to do this. First of all, we provide the main wrappers around, for example, Yahoo Finance. So every stock which is available on Yahoo Finance, you can directly pull it up here. And the way to do that is you just go to the cycle scanner. I make it even bigger. And in the cycle scanner, you have this enter dataset ID form. And there you can enter every ID. It's exactly the ID you will find on Yahoo Finance. And then you need to add the data feed wrapper. So in this case, Yahoo Finance has this ID, and just pull this stock up. So in this case, it's Apple. So I know the short abbreviation. But you can do this with every stock which is available via Yahoo Finance. Just look up the ID over on Yahoo Finance, then enter the ID here as first data set, and then add the JFA edition, and then it will automatically pull the data set from Yahoo. The other way is you can upload your own data sets if you like. So you can always go to My Datasets, yeah, and there you have some slots where you can update your own data set. Just go to Upload New, and here, and here you can upload a CSV file, and you see here the format is also shown here. It's just a basic, simple file where you just have a time and value. You can upload it, and then you can ramp it back in your scanner. So that's around this question. Okay, gold. So let's have a look at gold for sure. Happy to do. So let's move over to the dashboard into the commodity section, and gold is listed here anyhow as a standard item. So first of all, let's have a broader look here. I mean, gold is in a down move since July last year. Yeah, I would recommend, please go back to our summer summit we did last year. There have been several sessions about the financial markets and cycles, and there was an analysis, and I think it was end of June, where we showed cycles that gold is topping. Yeah, so just to comment, so you can track back this. But anyhow, that's the past. So if we want to do gold, always standard procedure, have first a look at the spectrum here, where you can then decide which cycle length is important. In this case, it's the length of 212. So let's activate the cycle with the length of 212 here in this case, and this will pull up the main cycle on gold here, which will show exactly the topping phase. Let's have a look. Maybe we should load also more data, but at least this is the current data, which looks like, yeah, this is the top where the bottoming phase is kind of ending. But let's also see then maybe this blue one is okay from a Bartle score. Yeah, so we could use this one here with the length of 312. So where we are heading now into the bottoming phase. So this is the current cycle for gold. I would recommend add some more data. So let's update the analysis here so that we have some more data on gold. But then we see a similar projection here. Yeah, okay, now we have 3 long-term cycles. If we add more data, 351, 267, and 214. This one here. Yeah. So, but at least I think the downswing here is probably ending. So that's gold. Okay. So let's move to your other questions. Okay. Standard tag for social media. That's a good idea. Good idea. So you propose direct button or idea to publish to Twitter. Let's think about that. So I will take this into consideration to make this more easy. So it's a good idea, so that that you can quickly search for published ideas or charts here. Yeah, I like it. Okay. So which would be the preferred period to examine for Apple? I always run into problems of different cycles when using different period. Yeah, that's also a very interesting question. So I need to excuse, I think the streaming quality seems to go down right now, but I will try to continue. I don't know what the network issue is here. So if we go back to Apple in this case, so let's use Yahoo Finance. So this is Apple. And you're talking about, which is the preferred period. So the way of doing this is you go to the spectrum chart and look for the most important peaks in the spectrum. So starting with the height, this is the amplitude in this case, the cycles with the largest amplitude, which in this case is 175, and the one with 283. So these are the cycles you would start with. 175, 283, 175, 283. So these would be the standard ones to start with. So then you can go down to shorter cycles and then never add more than 3 to 5 cycles in one composite, because then it will get cluttered anyhow. So that's the main way to do it. And yes, you will get different results because the cycle phase will be different for each cycle, but that's quite normal. So the way is you should now find a way how you can differentiate between realistic cycles or invalidated cycles. So you should use other data set to see if the cycles also appear in other data sets, similar to what I did with the S&P 500, where I used the volatility index to cross-check with the S&P. So for you need to think about what data set could be used to cross-validate Apple. And then in this case, maybe smartphone industry or chip makers for smartphones. So you always need to think about what could be a sentiment measurement for Apple. Maybe some mobile usage in general. So if you find a way to measure also sentiment for Apple, this might help to allow you to get an idea how to examine the right period. Okay. Open your site for a free week. I mean, that's a good idea. Maybe we should start some periods. But anyhow, the shared ideas. So for example, the links I shared with you here, you could use them even without being a member. So that's also the ideas which are shared. You can analyze the cycle on your own. So that's the cool thing, even if you're not a member here. Please try that. So for broad markets, do you think there is any significance to the shrinking of the 180 cycle lengths to the 164? 180 was dominant for so long, but now it seems like that the common cycle has faded. Yes, the observation is the same that I'm currently doing. I mean, that's in general, we need to be aware of that this is a common behavior, that cycles fade and other cycles will become more dominant. So the important thing here is that we can see that this cycle is now fading out of tune. And a new shorter cycle comes in. So if the longer term cycle, for example, will still show up in your analysis, like maybe in the volatility index, you know from other data set this cycle will get out of tune very soon. So you should more trust the shorter term cycle here. So the significance is now you should pay more attention now in your predictions using the shorter period. And this is also important if you use the dominant cycle lengths for the tuning of technical indicators. For example, you could use the dominant cycle lengths to fine-tune technical indicators with the harmonics of the dominant cycle. So therefore use the shorter term cycle with the length of 160 something or half of this cycle length, like 80 or 40, something like that, instead of 180. So then you would use harmonics of 90 and 45. So that's how I would use it. Okay, looking at the cycles of difference between indices, for example, the Nasdaq and the S&P, gold and spot price. So this is something I would now leave up to you at the end of this session, because this is exactly the right way to head into. So you should cross-validate not just one index. Yeah, you should cross-validate also if the Nasdaq and the S&P share the same cycles. And this is what Dewey always taught us. You should look out for cycles within cycles alignment. So if you find the same cycle length and phase also in the other markets, then the cycle will become even more important. Same for gold index and spot price and future markets here. So you should always use different data sets to check it. So yes, this is important, at least if you move then into the area and you want to trade your analysis. This is just cycle analysis. If you go over to trading, then you need cross confirmation, and you can use the spot price, you can use other indices. So for sure, that's important. Yeah, I mean, you're also talking about the spread. The spread is sorry. So the spread is also a very special topic, and yes, especially in the forex markets, cycles on the spread between forex pairs are interesting. But I will keep this as a special topic for one of the next sessions, I think, because a spread in between two data sets, especially in the forward markets, is an interesting topic. But I think I can't explain it now in 2 minutes. Okay, there's also another question. How can we add Fibonacci time cycles on high to high or low to low cycles? That's not directly possible right now, but I agree. Time cycles with Fibonacci length, Fibonacci length settings based on the sequence of Fibonacci and aligning them on lows or highs in the past would be very interesting. And it's not there yet, but we should bring this in so that you can click on a low, maybe here in the past, maybe here. What was it here somewhere in this low here, and then make a Fibonacci count